Welcome back. Still with this weekend's edition of the Editors Roundtable on CNBC-TV18. Thick in the middle of results season, and a lot's been happening in cement, as Nigel was saying before we went into the break. Old economy, and there are a few more sectors like that. Nigel, cement, take it away.
Well, for this results season so far, what's standing out is that cost still will be lower. Volumes are very, very strong, but pricing, that's disappeared totally. For the full of the last quarter as well, which is quarter four, which is seasonally very, very strong, we haven't seen price increases. And what I understand is even in this month so far, where normally you see April price increases, that's not really happened. Whatever's happened has been rolled back. Let's run you through the few numbers that we have and, how things have shaped up. What's strong is volumes. Volumes have been superb. If you look at Ultratech, Dalmia, and even ACC that had a shutdown in the Himachal unit, over there as well, volume growth of around 10 to around 15% odd. So no worries on that front. Costs have been coming in lower, which is good news. But, the pricing, on a sequential basis, they are down between 1 to around 3%. So pricing clearly has been under pressure, and South in particular, like ACC has exposure to South India. That's why the compression on the pricing front was nearly around 3% odd. We had Mr. Anil Singhvi of Sri Digvijay Cement, who has been, tracking the space for very, very long and heading quite a few companies. Well, he gave out a couple of points. He said now the focus is more on volumes. Pricing is taking, the backseat. And also he mentioned that the price increase may next come only in October. That's post-monsoon. He also told us that don't expect any inorganic growth, something that everyone was talking about a short while back. And I think Nimesh was one of the few people on the street who said, Nigel, I'm telling you, there's nothing going to happen. I can stick my neck out and say nothing's going to happen. And that's precisely the way it's played out. Now, Dalmia gave us a sense about costing, particularly on fuel cost, which was much higher, but that's gradually becoming lower. And they're saying for the coming quarter as well, it'll be lower by close to around $10 per ton. That's quite a large number. And for the last year, average fuel cost went up by around $50 per ton. Now, that's likely to correct back by around $40 to around $50 per ton. Finally, the questions to you, Rahul. What do you back from the cement pack? If you want to play that infra real estate theme, do you go with the big market leader, that's Ultratech Cement? Do you go for the ones with some valuation compared to the small or the mid-cap companies? And, how do you play this theme?
So I think, Nigel, it was a little disconcerting to see the raw material surge for both Dalmia as well as ACC. I don't think we were anticipating that in both the cases. And I think in Dalmia, the EBITDA per ton actually missed our estimates by almost 150, and that was quite a substantial miss when you were expecting about 1150 and it comes in at 900 change. ACC was no different. I don't think there's going to be too much of pricing action even on the other side of the monsoon, because then this will again start feeding into inflation. So I think cement companies may just try and wear it out till the elections. The one thing I concur with you is, and our cement analyst Jyoti also has this view, that demand growth aggregate for this full year will be about 8 to 9%. And I think if costs don't go out of whack, hopefully from the next quarter on, as you have the inventories replenish, which is the high cost inventory that you have, you probably get back to seeing 1,000, 1,100. For Ultratech, maybe even 1,200, 1,250. That would be a huge kicker for the entire cement sector. So I think when you talk about old economy, I think Madam Finance Minister has made it clear that she's reduced subsidies and she's increased the capital allocation for capital expenditure by 33%. A bulk of that seems to be going into roads. So we would play through stocks like PNC and KNR. And when we look at cement, we'll probably look at either very strong regional players or pan-India players. So I know optically ACC Ambuja look very attractive on valuations even today, but we'd probably back Ultratech as our top pick on the large cap space. I'd probably play it still through Dalmia because of the fact that his capacity is eventually going to head to about 70 million. I think the volume growth is going to be substantial. That will drive the top line growth. And like I said, once the low cost inventory comes into the system, that will be the added kicker for EBITDA. And I think if you want to go down the sort of market cap, you could look at either of the JK twins, maybe a Birla Corp or even a Sagar Cement, in which, since you were talking about deals, Premji Investments has picked up 10% in the last few months. So I think that's probably going to be our tilt. And if you want to play through roads, I think where balance sheets are strong, PNC and KNR would be two names that we would look at.
Okay, I think enough of stock talk. Long weekend coming up. What's the plan, Rahul, for the weekend?
So I think if you looked at the stocks that were up today, Nykaa, Ethos, there were a lot of these weekend relators. EIH was up 10%. So a lot of these hotel, luxury stocks going into the weekend. But I'm looking forward to a drink with you guys. I need it after having anchored this. Hopefully,
the next long weekend is on October 2nd. So it's far off now. So next is October 2nd, which is a Monday.
Okay.
The long weekend.
Long weekend, not a holiday.
Got it. I think there's a holiday for Eid before that.
Yes.
But I think April was good for that, right? I think for travel and tourism. But I think, I don't know if any of you guys heard the Indian Hotels conference call this morning. They're still sounding very bullish. Even after the stock going from 60 to 350.
Puneet says the best is yet to come, Nigel. So,
well, see, you do have IPL. There's still pent-up weddings from COVID happening. And on the other side, you have the World Cup. And let's not forget, India has a G20 presidency this year.
Absolutely.
So I think a sum total of all of that.
You kept saying that, it was revenge travel. I mean, it's lasted for 2 years now, and it's showing no signs of letting up. Anyway.
And they have the firepower to go ahead and keep increasing rates. Look at the average room rent. In Q4, it's higher by 7.5% compared to Q3, which is anyway, a strong quarter in terms of room rents.
The problem, Rima, is we are running out of firepower.
We are. He's not.
No, but I think, somewhere wage growth is going to have to support this. I think there's going to come a tipping point where you'll probably get into a bell curve kind of situation.
This is the best thing that you have said.
I think I mean, you'll have to have.
Come, right?
Because at the end of the day, it's disposable income, right? I mean, we track Phoenix Mills. So I was just looking at the ARRs on Make My Trip for St. Regis, for example. It's 26,000 rupees a night with breakfast. I don't know what percentage of the population in India can actually afford that. I mean, even for Taj, it's not, they're like 21,000 rupees. So I think you're hitting a plateauing level is my sense. And from there, I think it either flattens out or comes down, which could then be operating deleverage. But since we're at the start of a weekend, I'm hoping these gentlemen take me to one of these properties for a drink.
No, we are thirsty now. You promised us a drink, so let's wrap it up.
You are sponsoring the drink. Don't worry about it. You are the CEO. You are sponsoring
anytime, anywhere. Anytime, anywhere. But
we're done.
Right.
All
That's
set
me.
for the long weekend.
Yeah, after 15 years back on the anchor's chair. Thank you, all of you, for being on my show. It's been a pleasure being back here amongst all of these people. And thank you all so much for watching this edition of Editors Roundtable on CNBC. And if I remember correctly, I am supposed to say lots of news and updates on the other side of this commercial break. Have a fantastic weekend, ladies and gentlemen. Thank you so much for watching.